Good afternoon, good evening, everyone. Today is Monday, first full day of a full week. It's August 26, 2024. Our goal here is to review today's market generated information in a holistic fashion. We are intimately following the auctions narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. Please see our uploaded video if you like. It contains my real-time analysis. We use these archives as a tool to improve our professional development. All right, let us begin. All right, as a reminder, we did do our monthly end, our August month end video last night, which was just a weekly prep just to get us aligned with the market and understanding where we're coming from and possible expectations for how we'll end this monthly candle. So again, let's look at the monthly candle. Let's just see where we're at here, and then we'll start with our summary questions for a good understanding of where we're actually coming from and what was the goal for this Monday. Again, not too much has changed from the goal overall, which was just a continuation of the bull flag from the beginning of the month, the second week, and even really the third week. Just absolute impulsive and gunning for the all-time highs. So as we're seeing our coiling and our rally, our coiling and our rally, as mentioned in our weekly recap, would please watch that. We made that on Sunday. We definitely put a lot of effort into that, but we started with just more balance. The Monday, Tuesday, Wednesday, Thursday, Friday, all balanced from last week. So really the goal of today was just to really hold above this 50 and build volume higher, which will take us near the all-time highs and really get us and keep us above this this daily five simple moving average. Actually, it's a bit of the same situation here on the NQ. They had the same goal. We did notice that they're a little weaker, as we mentioned in our monthly prep. And their goal primarily was really just to hold this floor from the Thursday sell-off, because the buyers had some pretty nice positioning here for the Thursday and then Friday with a little bit of gap up and then a nice hold, but it was an inside bar overall. So now we ended up breaking that low from prior day Friday and Thursday, getting a little bit into the range from last week, but we're just on the lower half of the range from the balance range from last week. So really, again, the goal for NQ was just to build volume higher and protect those lows, and that's something that they failed. We'll look at a little deeper and see exactly what happened and how that transpired. But for starters, let's look at the catalyst that we had on our docket today, just for an understanding if we had any catalyst. Again, please look at our video for the weekly prep, and you'll understand just the catalyst that we have for this week. So again, not too much today, and it really shouldn't be too much activity for tomorrow either. For the earnings, for the economic calendar, we had our durable goods, which is at the 5:30. There really wasn't much of a reaction today, so we did not use that in our SOC calculations as far as our narrative. For tomorrow, we do have our 6 a.m. and then we have our 7 a.m. consumer confidence as well. So again, this is going to be fairly lighter for the economic calendar and the earnings. Same situation for tomorrow for the economic calendar, but we do have NVIDIA earnings in the afternoon on Wednesday. Looking at the actual sector tracker. Before we go here, let's actually look at the footprint. So let's not spoil it. Looking at our ES, again, if you look at our real-time analysis video, you can see the discrepancies and the divergence between tech and the overall market as a whole. So if you look at the volume is a little lower, going backwards to where we was. Starting the week, we're a little lighter, and volume increased throughout the week. And now we're starting the session a little lighter for the week here. So we do have some light delta plus 6,000 here. But again, you want to take this with a grain of salt given the lighter volume overall. Just one moment. All right, my apologies. I had to pause the video. But again, so you can see that our VPOC here was at the lower third of the range here. with the primary of the imbalance here, looking at the daily, was just really there. Again, we were looking at this in real time. It wasn't too much selling here. The majority of the selling is what we see for the NQ. And you can notice that the actual delta here is negative 6K. So again, we have more sellers that are stepping up. We've just been seeing that in general. They may not have the most progress overall, but you can see that the sellers are being a bit persistent, just in general. Lighter volume overall, but the delta is still a negative. Even looking at the daily candle, you can see where the majority of the sell volume, don't get it wrong, don't get it twisted, it was happening up and through here as well, but the majority of the volume was coming towards the end of the day, towards the lower third of that range. Overall for the range, we're at 340 for NQ and about 50 for the S&P 500. So we'll look at the details exactly how that formed on the market profile shortly and look at the candles as well. But let's go back to the sector tracker. Now we understand how tech looked versus how the S&P or the market looked. You can look at the specifics here for the S&P 500. So again, coming into this with the 5-day, we're looking at the monthly. You're seeing nice breadth overall. Of course, technology was selling off a little bit, but you're seeing some fairly nice breadth overall. And then going to the actual day for today's action, you can see the S&P was down, 30 basis points for the most part, and the leaders to the downside were indeed technology and consumer discretionary. I would imagine majority of this was Tesla, not so much for Amazon, but definitely Tesla as a whole, which definitely put some pressure down for the NQ, not just the XLY. Looking at the technology sector, NVIDIA we have as the number one weighted now. We're seeing them down negative 2.25%, and about 80 basis points here, and then Broadcom as well. So I would imagine just chips were selling off just in general. So a lot of this was just the from the chips. But the fact that they're weighted so heavily, you can see that just pretty much brought the market down as a whole. But it was nice to see energy, who's a little lighter weighted. Same thing with consumer staples, same thing with utilities as a whole and materials. But you're seeing more of this defensive stance. We've talked about this multiple times here. We even mentioned it in real time. So really not too much here. We're about even for the real estate, about even for industrials, which is nice. Again, a bit of a defensive stance. Same thing with the healthcare as well. Interesting to see that them being even. I am interested to see the financial sector and seeing how they still close fairly decent today. So overall, I think this is another sign for breadth. Even looking at the communications, which again, these are going to play heavy sides for technology as a whole. Looking at Meta versus Google here, Charter, T-Mobile, things of that nature here. So again, the majority of the sell-off was purely in tech, primarily the chips from what it seems, and then Tesla, which added to that as well. Those are very heavy weighted sectors and information in the S&P 500. All right, so let's go ahead and look at the market profile for a little deeper look for the daily. All right, sorry, I'm working on pausing the recording. But yeah, so we're going to look at the market profile. So not only look at the daily candle, but just a reminder of where we're at. So again, this is more of a balanced day. The shape is a bit more of a B-ish shape for the volume profile, not as much for the TPO profile. So time versus volume. So again, this is just that zone here from last week. It's the low volume node. We're gonna leave that in there for now, just for a bit of a reference here. But we ended up bouncing off that big zone here where people were selling, and this is the prior VPOC, prior week's VPOC as well. So actually, and it's not just for the prior week. This is for the last 2 weeks. This is the volume pointer control zone here with the 5620s to the 17s. So that's ended up being where we stopped today. So if you expand this a little bit more, again, you can see a little bit of shoot up. Got into this range here, broke that highs, but we can only trade a few points above. And again, do take note that this is more of a lower volume zone here. And really not seeing too much action in these spots here. Having trouble getting above this zone here, which is this 5670s. So again, once we break that zone above us, we're not able to sustain and it completely shoot down. No absolute trading in this middle gray zone here around these 50s. And we just found balance between the 50s and the 20s, or really the 50s and let's call it, the 50s and the 20s. So really not too much there, just another balanced day, to be honest. And this is after the just balanced week overall. So if you merge these two together, nothing really has happened. Down, up, down, up, down, up, down. Now we're like in the middle of this range here. So again, not really too much there, so we won't spend too much time. We'll look at the MQ, which was more of the structure that was broken. Ish. Broken-ish. Let me say that because this was still fairly mild overall. So again, if you look at the prior sessions that we have, again, please look at the prep video that we had. But we had our base rallies, and now we're just chopping sideways for the most part. So again, all this is still pretty mild. But we ended up starting here with this high volume node, couldn't get above this high volume node, and pretty much just built some volume here in this lower section, and basically just tested this this other high volume node here from the past 2 weeks. So again, if we break below the 600s, 19,600s, we have some singles below and a lot of a very big gap zone here. So if we do break these singles, we'll do a new drawing and maybe do some zones, but it doesn't really make sense for us to add more from this composite value area low and fill out this whole zone there. It's just a lot of drawings we don't need. So again, really not too much here. We would call this balance, but this was more of a liquidation balance day. B-shaped profile overall, and notice that we do have some singles. We do have some singles that were created, and this is between the 711s and the 644. So about 70 points of singles here, which is interesting to see, especially on a more lower volume day. It can happen at any time. I should probably pick a different color, but I know what this means, and that's okay. So singles will be something to look out for. So same situation, basically just lower balance. If we break below those 600s, the sellers will be in some trouble for sure. All right, let's look at the intraday. Look at the 65-minute candle. Again, this was a bit lower volume overall, so we don't want to put too much information, try to glean too much from this. But again, you can look at the prior days, lower highs, lower lows, balance, lower highs, lower lows. The majority of the volume was taken in that lower section. And again, that's something that we already talked about looking at the market profile, but you can just see you can just pause the video and see how we traded here. Again, there was some activity here, but just a really lack of willing to trade these higher prices. We ended up slipping through, creating those singles as we discussed. Big sell imbalance here. That's where the majority of the volume was taking place. The VPOC negative 5,000 sell delta, and we close at the lows. So even coming here, the buyers tried to force their way off the ground, and we ended up having run into like another wall. A lot of sellers really just held their ground from that original sell imbalance here at the 42s. And again, there's no reason for us to do a zone here because we understand by looking at those singles, once we get above these 44s to that 50, we're going to have those singles here. That's going to bring us all the way up to the 711s. So this is already naturally taken care of on our market profile, which is the reason that we start there, or that's the reason that we use that tool. Same situation here for the ES, but again, they were much more balanced overall. Still lower highs, still a higher high, and just more balanced from what we were seeing. So again, looking at this in real time, you are not seeing the same weakness from the S&P 500. It was actually quite the other side, even with the selling off for the technology departments. We were seeing a lot of buy deltas, a lot of force, but just not really much reward for their effort. Even towards the end of the day, still seeing a lot of buying overall. So you want to ask, who's buying here? Are these new money longs or these shorts liquidating some positions? We're not really sure what's going on there, but just something to be knowledgeable of. Just a quick look at the 138 minutes, so you can just see it from a structure standpoint. If you do like candles more, I'm not going to spend too much time there because again, we have this in our real-time analysis. Same situation here, looking at the S&P 500 with the drawings, without the drawings. All right, so we have a good bit of information there. Let's look and see how we actually traded from the candle structure. I need to figure out why these. Okay, no, they are protruding now. I was wondering why. Just ran into an issue earlier in the day, but I digress. So we looking at the Friday session, and then the overnight session for Friday was Thursday overnight. So as we drifted overnight, actually, let me not gloss over that because this is somewhat important. Just give me one moment. I'm gonna pause. All right, my apologies. I need to fix some data here. I want to save some of this time. All right, so again, we'll start looking at the stronger one here. We'll look at the S&P 500. So again, let's get some context overall. I know this is a fair amount of information that we're looking at here, so just bear with me. So again, we have our today session here. We have our overnight. We have our Friday. We have our Thursday overnight, and then we have the Thursday sell-off, and then the overnight session. So turning on the studies, again, we have our Friday session and then our Thursday night over session. So as we have our sell-off on Thursday, again, as we discussed, you would think you would see balance at the lows and maybe leak lower, or if anything, not, excursion damn near halfway to that sell-off point. So again, you were seeing some nice strength from the ES just in general. And that showed on Friday as well as they closed well above their prior IB high. Again, all this information was talked about in the prep. So, but just some general context in case you didn't watch the video. So we closed somewhat strongish, but not breaking those highs for Friday. And we're balancing near those highs. So again, this is very showing some strength with breadth overall, especially as tech was weak. As you start the day, again, you can look at our prep. This seemed a little bullish. Not bullish, but just a sign of strength. So as we're balancing near the highs for the overnight session, we end up having like a little down spike and then a very strong close. But you notice you see these double rejections here into a lower high. So again, we did pick this up in real time, and you can see this on the DOM and see how that's actually traded. It's a little bit deceitful to kind of catch there was no real strong selling pressure from what I recall. Definitely lower lots from what you can see. You're not seeing any like huge size down here, but I'll go ahead and put these bubbles back on close. So again, ES was not the weaker one. They were a bit strong, but even this was very much of a weak opening overall. Tech was absolutely dragging them down, which is the main component for the S&P 500, though they're not just technology. But I digress. Fairly simple day. Looks like an open test drive to the downside, if not an open rejection reverse, rejecting the highs from the July area and a look above and fail for the prior week. So we bust above the prior week and then closed the A bracket extremely weak below all DGPs. Yeah, and with some fresh lows for the overnight session. No data or anything. We're rejecting the open multiple times. Find our way to a big impulse, and then even after the impulse, we are still under this 5 smoothing average for these 3-minute candles, and then just absolutely just riding this all the way down. Anytime we will get above, we will pretty much just two-way trade and find our way lower. As soon as we got above, we failed the full session VWAP, tried to reclaim the RTH VWAP, and could not close above it once. That warrants another leg down, and then we pretty much just follow fine balance towards the end of the session, closing below all DGPs for a trend down day. That would be the stronger of the two. Looking at the NQ, who would be a little bit weaker. Same situation, same backstory. The only difference is they did not close as strong as the ES did. They're barely above their IP high for Friday. So as we're drifting in the overnight, notice how we're already under the prior IP mid opposed to the ES, who stayed above their prior IP high for the whole time. So again, you can see the weakness here overnight. And this was barely, was this even a lower? Yeah, this is pretty much like a double TPO high here. It's like an equal high. So we could not break that high for the start of the Sunday session. Ended up finding more more pressure to the downside. Again, we're not really seeing too much there. So lower lows, equal highs. We're just balancing now. We ended up trading above this high point for a little bit, but we really couldn't stay above it. So we're just kind of flirting with these overnight highs, trying to make new ones, kept getting rejected. It's two-way trading around here. Eventually just said F it, had a leg lower. We did not make a new low by any means, but about time we opened for the RTH. We're already back into the middle of this range, which is already a little lower overall compared to the S&P 500. So as we start for the actual RTH, again, you'll see some similarities as well for here in the S&P 500. But again, a little more steep, a little weaker. Same open test drive to the downside. I wouldn't call this open rejection reverse because we were just in the middle of our range overall. So we're a little hesitant to get ahead of this. The main reason there was no real, well, I'll leave that comment out. But my point is, very weak, no kind of trading above. As soon as we got to the open, no attempt to get back to the open, to the midpoint. Hell, even the DGPs, not even the 5 smoothing average. So again, we're just weak across the board on both indices. Once we got to these lows here, they ended up sustaining a bit more than S&P 500. But again, you want to take this with a grain of salt because these fools are already broken the past 2 days for Friday and for Thursday. So yeah, maybe there's like some stuck sellers or here or something like that that kept them from breaking more lows. But they're the reason that we got here in the first damn place. So we really can't give this too much credit that they made higher highs and higher lows for the remainder of the session. Because again, this was just bearish overall. They're the reasons that we got down here. So, take this with a grain of salt. All right. So we understand the goal, we understand where we're coming from, how good of a job everyone did. I think the buyers did a excellent job for the S&P 500. I think the buyers did a poor job for the NQ, and sellers are still stepping in as they have been. Looking at the delta down here. So again, not really too much to say here. I don't think much has changed. We're still balancing just a little higher, a bit more weaker for the NQ, which is fine. They're not weighted the same as the S&P 500, so no surprise to see more selling. I think we'll need more information. We can't speculate how this may go for the NVIDIA's earnings. So we just need a little more information as we head into the week. Tomorrow, not too much on the docket for earnings or the economic calendar as we discussed. So again, you want to be a little patient, expect possibly some more balanced trading. If we do slide under these 600s for the NQ, don't be surprised if we have some downside pressure, and that could really take us honestly back down to like a good 400 or 500 points. So you just want to be mindful of that. The S&P 500, I'm not really too worried about them unless they lose the benefit of the breadth. If we slide below these 5620s, we just have a bit of a lower volume area for the past 2 weeks, but this is just a lot of balance just overall for the ES, just in this area here. So it's really hard to call in this zone here for the ES. I think we need to be more worried about the NQ, and they can seriously do us some damage given the way the S&P 500 is weighted as long as NQ. Again, we go as tech goes. And NVIDIA has their earnings on Wednesday. Do not underestimate the implications of that and what can happen. Yeah. But anyways, I won't drag it out. Thank you guys for being here. Take care.